Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Thursday, June 1st, 2023. It's now the 31st of May. We start off in the S&P 500 daily chart and DeMark looking back to end of December 2021. I'll zoom into the current area now. The S&P 500 daily chart has printed the combo and sequential sell setup 3 count. And to negate that for end of day on the 1st, there must be a close below 4151.28 for the price flip to the buy setup count 1. And to do that, it would need to get under the cloud conversion line at 4167.54. And it's been pretty good support for the last couple of days here, and then resistance here, and price in the aftermarket hours for the S&P 500 at 4:17 p.m. Central Time on the 31st is 41.83. So to the downside again is the conversion line, and it looks like the mid band of the Stark bands, which is a 9 simple moving average, is right there with it on the conversion line. Keep going, and the daily baseline is there at that level, and get under that. The trend factor down 1 will become a factor and pretty good support. And there's that ongoing demand line, which for the first will be at 4106.50, and a close under that level will qualify it for end of day on the 1st. And right under there is the lower Stark band, and then the channel 3 low under that. And there's the disqualified 50% momentum down. To the upside is the ongoing supply line, which for the first will be at 4208.20. And a close above that for end of day on the 1st will qualify that level. Keep going, could tag the 50% qualified and confirmed propulsion exhaustion up, which gives us better odds of more upside. But the upper Stark band is there along with the channel 3 high, and then that qualified supply projection is hanging over our heads there. And for those who are not familiar with supply lines and qualified demand lines, the capital markets are based on supply and demand. So supply means they supply the market with stocks, and demand means people are looking to buy stocks. And of course, we're waiting for a demand projection. Eventually, we have to get this one or whichever demand line comes up qualified, and that will give us a projection somewhere down there. The NDXT Equal Weighted Technology Index has met its 100% target from the one-sided diamond pattern here. The rules are after the breakout there's a 50% target, and that just happened to coincide with the 0.382 DeMark relative retracement. And then there's a 100% target up here. And it looks like it was met, and then had a black candle here, which is a down day with a higher close candle, and that's a bearish candle at the top of an extreme uptrend such as this. So you got to have a pretty good uptrend, and then if you form one of these black candles, it's pretty much a given you're going to have some downside. You can see there's one wedged in here. A lot of times they don't matter. They're not within big uptrends like this one. But when they're like this, after a decent uptrend, then we get some downside. Same thing here. And this one coincided with nailing that 100% target coming out of the one-sided diamond pattern over here. That was back in January. So it could just pause or have more downside, there is a gap zone here to fill. Looks like it's in between 7,300 and 7,400, somewhere there. Let's see in the thumbnail, maybe 7,350 or 60 up here. And then to the upside is the DeMark relative retracement 2 at 0.618. And then the S&P 500 takes approximately 6 months to rise 39% from this breakout here at the one-sided diamond pattern. And that happens only 11% of the time. So actually it's been about 6 months. So this broke out, I don't know, somewhere in the middle of January, maybe the middle of June, see what happens. They clear everything up and the Fed doesn't hike, and maybe we could make it up there. Let's give it another couple of weeks. But a pause or pullback is in order. And I could quite possibly be jumping the gun when I drew this purple line here, this parabolic line here, curved line, from about the beginning of 2022 over to present day. So that's maybe an indication that growth has run its course, but this has been one heck of a run. If you get a chance, go back and see some of these weekend videos for the NYA top caller. Let's see, when is this? February, right before February, those January videos. And I was saying that if it doesn't make it through that 4.0 relative performance ratio, then it's probably going to head down for a growth spurt. And wow, what a spurt it was. So we were buying a bit of growth here and was able to hang on to some Microsoft stocks. So did okay there, but I never in 1,000 years expected this, meaning this leg right here came down from around the middle of April, somewhere right there, maybe near the end of April, where it was going sideways and then just fell off the face of the earth. And of course that reflects the regional bank crisis era there, so we're still in the midst of that. A new revolution in AI, so put the two together and this is quite justified. So let's see if it can hook around. If it hooks around over here in the thumbnail and heads up, then I did okay putting this curved line in here that matches this bottom over here to this one, but it could just keep going down. The NASDAQ 100 NDXHILO chart looks like it really took a nosedive down, the blue 5 EMA, and did not go under the 10 EMA in red yet. And the ROC 12 is at negative 1.96, so there is a chance for tomorrow the blue to get under the red and have the ROC 12 to be within plus or minus 5 of 0. So in this case it would be negative 5. And all three KSTs are exactly the same as the previous video where we looked at this. So they're dead in the water, sort of. And meanwhile, the NASDAQ composite itself, its NAHILO chart, is very strong. Look at that. There was a tick down in the NAHILO index and dotted here. But really, it's just the momentum is so strong to the upside that it really has no indication of rolling over yet and has that really nice looking rainbow pattern going on there. And the ROC 12 is way up there, 47.24. And its KSTs have actually improved a little on the long-term KST here. Looks like it went above the signal line in red, so yeah, negative 121.86 for the KST, negative 135.70 for the signal line, so there was a bit of a crossover there, and now the KST needs to get above 0. Intermediate term KST is above 0, above its signal line and headed straight up, and the short term KST still has rolled over below its signal line and still pretty far away from 0, so intermediate term and long term looks pretty good for this. And we'll forego the NYHILO for the New York composite, as it still looks as pitiful as it did from the previous video. The S&P 500 support and resistance levels big board chart shows the gray areas at the weekly support line and the daily pivot point. Price in the aftermarket hours for the S&P 500 at 5:24 p.m. Central Time on the 31st is 41.81. So I was a little more conservative with the up and down levels here, as it looks like they're going to pass the debt ceiling limit bill. It will eventually get passed, so to the immediate upside is the uptrend line at 4193.02, ongoing supply line 4208, and R2 around 4010. And to the downside is S2, S1, the daily conversion line, the former top of the range, and the weekly conversion line for downside. And I was just thinking about it, and it could be an issue in the future if they pass laws forbidding Congress and the Federal Reserve from trading their own accounts in a situation like this with the debt limit. So if all those congressmen have no stake in the market, would they really care if the market tanked or not? So that's something to think about for the future. And the S&P 500 daily is still underneath its 21 EMA signal line, and the NASDAQ 100 daily AD line is still slightly above its 21 EMA signal line, and the ROC 1 is still in its green zone at negative 0.61 and pointed down. Same thing with ATR2, it's within its low volatility green zone, 42.89, and pointed down. PPO Extreme took a little bit of a dive. It's down to 3.32% above 0. And the New York traditional McClellan breath oscillator to get back to 0 would require 871 advancers over decliners to get back to 0. And a little tick down from yesterday at 694 to get back to 0. Have a great day.